Akash Prakash, CEO and MD Amansa Capital, who joins us now from Singapore. Akash, thanks so much for taking time out. Firstly, a quick reaction on the budget, and do you think the budget was a pure disaster in isolation? It wasn't bad, but the fact is that it came from Chidambaram, and that was a little bit of a disappointment considering you had your hopes high.
Yeah, I think markets have, to me, have overreacted, I think. I mean, I don't think there's anything that negative in the budget. I think this whole TRC certificate thing also will be clarified, because the FM was the person who's put GAR to rest, so I don't think he's going to introduce something like this TRC to, bring back GAR or something like that. And I think the problem is, unfortunately, Mr. Chidambaram is having to bear the burden of being the flag bearer for all economic policies of this government. So we want to see everything from him, I mean, he's not the Prime Minister, unfortunately, right? So, you can't get him, he can't give you land acquisition, he can't give you environmental approvals, he can't give you coal blocks. So I think, I just feel the problem is that the budget was not packaged properly, in the sense that there was no big bang idea, no big bang reform, nothing. People wanted, I think, more sound bites around, a longer term vision for India to regain excitement on the country. The actual budget itself, I don't think is anything that negative. It's just a question that people wanted a lot more, and people have very high standards for the FM since he's come in September, and he's the only person in this government which seems to have any sense of urgency of trying to turn the economy around, and therefore he has to bear the burden of all expectations.
Akash, the earnings push is behind us. Reserve Bank of India is yet to make up its mind on which way interest rates could move in the near term. Global market environment is slightly shaky. So what really could be the next big trigger for Indian markets, and from where that trigger eventually will emerge?
I think the next trigger will have to come from a continued series of reforms from the government, in the sense that, I think this market now is going to be held hostage to that. So if you need to see more, this cabinet committee on infrastructure or investment has to meet, has to clear multiple projects. The land acquisition issues have to be solved, environmental issues have to be solved. You have to continue seeing the 50 paisa hike per month on diesel prices. I think the market will keep looking for cues from the government on continuing with the economic reform program. If those economic reforms keep coming through, I think the markets will do fine. If they don't, if the government goes back to cruise control, doing nothing, business as usual, then the markets are not going to be, then there's no trigger for the markets to go up.
So Akash, from your perspective, how important is the Mauritius tax issue?
Yeah, no, I think, I hope this Mauritius thing, frankly, I wish Mr. Chidambaram had just scrapped short-term capital gains tax. If he had scrapped short-term capital gains tax, no investor would need to come through Mauritius or, whatever jurisdiction they want, because that's the only reason why investors go through Mauritius, is short-term capital gains tax. So, unfortunately, every year for the last 2 or 3 years, something or another has come on Mauritius, or something around it. So, I said I wish he had scrapped short-term capital gains tax. This whole Mauritius issue would have been laid to rest once and for all, and nobody would have cared from which jurisdiction you're coming. But having said that, he has given some clarification. It depends on how the income tax authorities on the ground actually implement. If people start coming and asking you for more details beyond the TRC, it is a problem. So let's see how actually they implement this wording. The wording in the document is actually what was the same thing which was there last year. It is quite on paper quite serious, because it basically says that TRC does not by itself mean you can get the benefits of the tax treaty. So I don't know what other justification they want to get the benefit of the tax treaty, what the details are, we don't know. But the FM, as I said, is a very market savvy, very, he understands these finer details. I'm sure he will come out with something which will calm the markets down. But as I said before, I really wish he had just scrapped short-term capital gains tax. This whole Mauritius issue would have been laid to rest once and for all.
Akash, even though the finance minister yesterday clarified on how exactly the tax treaty will work, do you think market men are not satisfied with that clarification?
No, actually that's not, because I think if I'm not mistaken, there's a famous, there's a case in the Supreme Court, I forgot the name, I think some Andaz Bachao Andolan or something, under which the Supreme Court and the income tax authorities have clearly said that to get the benefits of at least the Mauritius tax treaty, all you need to produce is a tax residency, a TRC, a tax residency certificate for Mauritius. I think what the wording of this clause, which he's right, it was actually introduced last year, it was in the footnotes of the budget of the finance bill last year. I think it's come in the bill itself this year. This actually, the statement says that a TRC or a tax residency certificate by itself does not mean you are entitled to the benefits of the double taxation avoidance treaty. So the question then comes is, what else do they need an investor or a corporate to produce to get the benefits of the tax treaty? That's not very clear. So I think it would be helpful if they would clarify that, because just saying that this was something that's already been there, that's actually not, in my opinion, strong enough clarification, because this seems to attack the very premise which everyone has been working on, that if you have a TRC from Mauritius or Cyprus or wherever, you are entitled, more or less guaranteed, the benefits of the double taxation treaty. This clause seems to go to the heart of that, saying that the TRC is no longer enough.
Yeah, that's the sense also we're gathering here, Akash, that some more clarification, I guess, is required, and what will happen to GAR indirectly because of this clause. I think that is something which needs to be clarified. So Akash, to your mind, how important is the Mauritius route? I mean, how much of money which come to Indian markets, which comes under the head FI, FI activity, comes via the Mauritius route?
No, Mauritius unfortunately is still important, because most investors, are compelled to come to Mauritius, because a lot of their competitors are also using Mauritius. So you can't have one fund which pays tax, another fund doesn't pay tax. So it's a competitive problem. I would say at least half, if not more. I would say probably more. In fact, about 60-65%. This is again rough numbers. I don't have any precise number on this. Just a guess, just a ballpark guess. I would say about 50 to 60%, if not more, of the FII flows into India are coming through Mauritius or some other tax or some other zone with a double taxation avoidance treaty. Singapore, Mauritius, Cyprus. I think at least 2/3 of the money, FII money into India, is coming from one of these 2-3 tax zones. And this TRC issue is not just a Mauritius issue. It obviously applies to anyone claiming benefit from any jurisdiction with the double taxation avoidance treaty.
Akash, but do you think the Indian market per se is in a spot of bother? Consumption cycle is slowing, investment is stuck, so suddenly we are stuck in between a rock and a hard surface.
No, I think the Indian economy clearly is on a cusp, hopefully, of a revival. I mean, I think everyone has talked about the fact that we, as a country and as an economy, are extraordinarily vulnerable to foreign capital flows, which is unfortunate, because it's a macroeconomic vulnerability which we've not really had in the past, except maybe in '91. So that's an issue. So we need to continue receiving foreign capital from overseas just to keep the rupee stable and to keep the, to finance the current account deficit. I think we are at a turning point in the economy. I think that there is a significant desire and effort on the part of the government to kickstart private sector investment, which is the one part of the economy which is in serious stress. But you've got to see a continuous stream of reforms. You've got to see, it has got to become easier to set up new projects and to do business in India. And I think whatever reforms the government does over the next 2 to 3 months, beyond the budget, will have to be directed towards making it easier to do projects, to commission projects, to set up new projects, and to do business in India. If we don't keep moving to ease business, ease doing business in India, we're not going to be, going to continue getting flows. So I think foreign investors, this budget has not been enough to change the market's trajectory. I think over the next 2 to 3 months, you need to see continued reforms coming out of Delhi, whether in whatever sphere they can be, in terms of cutting subsidies, improving project approvals, correcting the lacuna in policy. If those reforms keep coming, the markets will do okay. If the reforms don't come, the market, I don't think, have any upside.
Akash, so exactly a month ago when we interacted last, you were of the view that Indian markets were not attractive, valuations were looking slightly stretched. But after the recent correction, are you now confident that valuations are looking attractive, and especially in the mid-cap space, which have been beaten black and blue?
Yeah, getting there. I think in the mid-caps, definitely. In the mid-cap range, I mean, I think that, as you know, and I think you've commented on this, there's been a real carnage in the mid-cap space for various reasons. There are multiple mid-cap stocks which are down 25, 30, 35% year to date. Some of them very good businesses as well. So there's a clearly value already emerging in that space. And some of the large caps as well. I think that, you know, if the market, you know, keeps sliding, value will re-emerge in the large cap space as well. I think it's still slightly away from that. A couple of stocks are in that zone where you could probably feel like buying them right now. But we're getting close. So the valuation at least are lining up to be far more attractive now than they were a couple of weeks ago.
So have you been a buyer in this fall?
Yes, I mean, clearly. I mean, if the market keeps sliding and keeps coming off, we will be buying into that because, you know, we are not trying to market time. There are certain companies which we have on our radar, which we were not able to buy in the last couple of weeks or months because the stocks were not in a price range where we feel comfortable buying. Some of them have now clearly come in that price range, and we will buy. And we were buying yesterday also, frankly. In that last 1 hour or 1.5 hours when the market just fell off a cliff, we were buying quite a few companies.
Right, Akash, really appreciate your time and thank you for joining us. That was Akash Prakash, founder and CEO of Amansa Capital.